To the entire Opendoor community, I hope you are making boatloads of money, because I sure am after the week we just saw. Folks, we are at 52-week highs, and it seems like we are just getting started. I'll break down everything Opendoor in this episode, including some of the bigger macro news, Jerome Powell, aka Daddy Powell, giving dovish tones on Friday at the Jackson Hole Symposium. Also, the US is taking a stake in Intel, and much more on this week's Market Prep video. As always, if you get value from these videos, make sure to share with your best buddy, share with your financial advisor. Don't forget to like, subscribe, and follow wherever you listen to podcasts. And now, folks, let's roll. I'm Brandon. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate or a more conservative swing trader or investor, we've got you covered. If you want to support the channel, make sure to check the links in the description. All right, folks, Opendoor, we're here. We've been talking about it for over a month now, about getting back to that $5 level. And guess what? On Friday, it happened. We had some massive macro tailwinds from Jerome Powell, basically telling us that they are going to switch up their policy as it relates to cutting rates. And it seems like we're going to get a rate cut in September. And of course, that is massive news for the real estate industry, especially Opendoor right now. So let's take a look, first of all, at this piece that came out from Simply Wall Street. Opendoor Technology stock surges 636% over the last quarter, coupled with substantial executive changes as Shrisha Radhakrishna has taken on the role of interim president. The company's Q2 earnings improvement, marked by a reduction in net loss and positive revenue guidance for the upcoming quarter, reflects a strategic operational shift. Furthermore, Opendoor's introduction of the Cash Plus product aims to enhance the home selling experience. These developments align with the broader market's enthusiasm, as potential rate cuts have spurred interest-sensitive stocks, reinforcing the company's recent robust performance. We have just simply been on a tear. The bulls have been killing it, and I really hope that you have been enjoying this ride and you're making a ton of money, because the momentum right now is super strong. So want to take a look at this piece here from the interim CEO, Shrisha Radhakrishna, that I thought was very significant. He put out this tweet last week. He said, "Hey, Open fam, y'all are something else. I've literally scrolled through thousands of your tweets, from the genius level ideas to the how did they even think of that gems. Seriously, your passion is incredible. I'm convinced AI is a core primitive for our next phase of growth." And so you can see from the meme that he put out here, he is essentially saying that Opendoor is leaning into the AI movement, which I think is a very good step for the company, considering the fact that we are in this AI boom right now. I mean, this is massive. The fact that they are essentially changing the narrative of them just simply flipping homes is massive. This is what Eric Jackson has been calling for, and really what the entire retail community, this decentralized hedge fund, as Anthony Pompliano likes to put it, it's what we've been calling for. And the fact that you have Shrisha coming out and publicly saying this is the direction the company is going to be headed is really good news. And speaking of Eric Jackson, I mean, this man has no stop. So as we covered in last week's midweek episode, he's now standing in front of Drake's house, trying to get him to buy Opendoor, which I think is hilarious. I love it. And if you ever doubted that this Opendoor movement was basically global, well, here's the proof. He tweets, someone sent this to me from Drake's concert in Stockholm right now. And you can see pictures of people holding up, signs of Opendoor at the Drake concert in an entirely different country. I mean, folks, this movement just continues to build. It continues to spread. You love to see it. And if anybody missed it, Eric Jackson was on Bloomberg last week. He did an interview. I watched it. It was very interesting. And one of the hosts of Bloomberg, who was interviewing Eric Jackson, Tim, he asked Eric, "Have you sold any?" To which Eric responded, no. And then Tim said, when will you sell? And Eric Jackson responded, I don't think it's 82, Tim. If they put some effort into this, this could be a $500 stock. Tim responds, oh, wow, $500. So Eric Jackson is upping the ante here, essentially saying if Opendoor plays their cards right, we could be looking at way, way more than just simply $82. So I thought that was a pretty profound interview that Eric Jackson did. And look, Eric Jackson has been the champion at this point for the retail community. I mean, honestly, I think he should be on the board at this point. I hope Shrisha and the board decide to put him on, because that would just be more fuel to the fire for this movement. He's been doing a ton, folks. Between him, between Anthony Pompliano, and now you got Paul Tudor Jones in there. And we're going to get into some of the other institutions that might be in play after the price action we saw on Friday now. But the point is very simply, this movement is growing. It's growing, and this company is moving in the right direction by leaning into AI. So I hear a lot of people say that this is just another AMC. This is just another GameStop. And yes, at first, a month ago, it did appear that way, especially when you had Krispy Kreme and GoPro and all these other stocks that started popping out of nowhere off of Wall Street Bet's interest. Yeah, it did appear that way. However, I would counter that by saying the one thing that really stands out with Opendoor versus AMC and GameStop is the fact that we are actually creating change. A CEO of $1 billion company, Kerry Wheeler, stepped down weeks ago due to the pressure that retail put on the company. Also, the fact that this is more of a fundamental play, right? As Eric Jackson, as Anthony Pompliano have said, and many, many others, this company is in the real estate industry. The fact that we are going to be getting rate cuts gives this company tailwinds on a macro front and really allows it to take that next step in the journey. So that's something that AMC and GameStop didn't have in 2021. So yes, you have the short interest with Opendoor. Yes, you have the retail interest. Those are all similar to AMC and GameStop. However, this is more than that. This is a fundamental recovery play, and I believe that we are starting to see the beginnings of that play out in the price action. All right, so let me get off my pedestal here. Let's jump right in to the charts and see where we stand right now. So as you can see from my Thinkorswim platform here, this is Opendoor, of course, and look at that beautiful daily candle that we got on Friday, folks. And one thing I want to point out here, the last time that we touched 5 was back on July 21st, right? When we got that first spike up, you had that insane volume, almost 2 billion with a B in volume on that day. And you can see very clearly, we almost tapped 5 and then we got smacked down. That is an ugly, ugly, bearish looking green candle. Now, if you compare that to the movement that we got on Friday, look how strong this is. I mean, the pullbacks on Friday intraday were very, very shallow. There was a lot of momentum, and really you had a couple things lining up. We talked about on the midweek episode last week, all the open interest that we had sitting at $4 on the options chain. I talked about the fact that that creates a potential gamma squeeze scenario. You had a lot of open interest at 4. You had a lot of open interest at 5. Those are all contracts. As the deltas grow, market makers have to hedge for it, and they do that by buying shares to remain net neutral. So you had that buying pressure happening on Friday, in addition to the fact that you had, I'm sure, plenty of shorts covering when they saw the overall momentum happening. And then on top of that, you have momentum traders and just generally other buyers of the company. You had all that coming together on Friday. You had a clean break of the 38% Fibonacci retracement level of 392. And then once we had that, along with Jerome Powell's comments early in the AM on Friday that were dovish, you had everything lined up. And you can tell that as well by taking a look at the volume that we had on Friday. So as if, this green God candle, I'll call it, wasn't enough, just take a look at the volume, folks. The volume that we had on Friday was the highest daily volume that we have seen on Opendoor since July 22nd. So massive, massive volume shows major, major conviction in the move. And we did break 497, which was the entire retracement from July 21st. And we actually even got up to 508 before the bell went ding. And if we drill down into a 30-minute chart in after hours, we even went higher, getting as high as 527. So a ton of strength. And the fact that you even had follow through in after hours just goes even more so to show you how much conviction the bulls had in Opendoor on Friday. So we had a technical breakout, we had macro news drop, and things are setting up beautifully right now. So one of the things that I want to point out and that I'm constantly pointing out on this channel is the RSI, because this is the RSI is a momentum oscillator. This is clearly a momentum play right now. It's also a fundamental play, but right now, obviously, it's a momentum play. So I believe the RSI is important to pay attention to. And as of Friday's close, the daily RSI is technically overbought. We are sitting at 76, but remember, back on July 21st, we did see that RSI get all the way up to 90. So we could see some more momentum in the very, very short term to the upside, but eventually I would expect a bit of a pullback and a bit of a reset that's healthy when you're trending to the upside. You want to see some breathers for the stock, if you will, so that we can get some of that consolidation and really set up for the next level. So all in all, very, very exciting. And if we just zoom out a little bit to a weekly chart, basically it looks bullish as well. And some of the next resistance levels that I'm paying attention to, I'm going to get into some of the Fibonacci levels that you can see here on my chart that I'm now laying out since we broke out of that previous Fibonacci retracement. Beyond that, you have some previous resistance levels that date back all the way to basically 2023 over the summer in July. And we had a high there of about 541. So, from that standpoint, that's the next resistance level I'm looking at, basically 540 to 550. But overall, we look very, very bullish right now. And as far as those Fibonacci levels that I was just talking about, if you've been watching the channel for a while, I previously had a Fibonacci retracement from that July 21st high, and you had the 51-cent low. I erased that, although I am keeping the 38% Fibonacci retracement level, which was 392, as a potential support area. If we do come off a bit over the next couple weeks, I could see that being basically support now. But as far as some of those next levels that I'm looking at, obviously you got $5. That's going to be a psychological level. But then beyond that, using that low that we had back on August 7th of $1.70, I've now laid out some Fibonacci extension levels. So we can get an idea in the short term of, hey, what are some new levels that we need to be paying attention to as far as resistance goes. And as I was just saying, 541 to 547, 550, basically in this area. If we're technically going off Fibonacci extension levels, however, which I love to use, I'm looking at 547 as that next level that we're looking to get to. And then beyond that, I'm looking at just a hair below 7, which would be a psychological level. I'm looking at 695. That would be 161% Fibonacci extension level there. So those in the short term are the next levels that I'm looking at. And honestly, given the way we closed on Friday, I would not be surprised at all if on Monday in pre-market, we get a bit of a gap up and test out that 547, 550-ish range. So very exciting action here. Obviously, as we've talked about for weeks now, we got the golden cross, the 50-day above the 200-day moving average, an insanely bullish sign from a technical analysis standpoint for the long haul, right? Not just the short term, but the long haul. So we got the golden cross, and now we are seeing the follow through from that. It's just a really exciting time if you're involved in this stock. So now let's take a look at the options chain. So if you've been following the show for a while, I love to watch the options chain just to get an idea of where traders, where investors, where their conviction is at, right? I think it's important to keep tabs on this. And you can see the volume that we did on Friday was just absolutely nuts. We've been averaging right around 1 million calls over, the past couple weeks. And on Friday, we saw double that, almost 2 million calls, 1.97 million to be exact. And the put side was only 500,000, which leaves us with a put to call ratio of 0.28, which is just absurdly bullish. And if we take a look at some of the deltas here for the ranges where these calls and puts are being bought, you can see that on the put side, 51% of the puts that were transacted on Friday had deltas between 0 and 20, essentially lottos, whereas on the call side, 29% were bought on the call side with deltas between 41 to 60. So why is that significant? As I pointed out in the midweek check-in last week, that shows a bit more conviction. You don't want to see a ton of call action happening with deltas between 0 and 20. Those are basically lottos, very, very cheap. The higher the delta, the more expensive those contracts are going to be. It shows a bit more conviction, I believe, in the options chain. And if we take a look at the weekly expiration for August 29th coming up, just to see where some of that open interest is sitting, as of Friday, you had 22,000 contracts that were right at $9.50, insanely out of the money, obviously. So those are going to be a bit more on the lotto side. You can see the delta on that right here is 17. But if you take a look at some of the volume that happened on Friday, right, you had 59,000 volume sitting at the $6 strike. So the open interest on this, which is as of Friday's close, 11,000. Once that updates on Monday, I would expect that number to jump up considerably. So a lot of activity happening around that $6 strike for the August 29th expiration. And if we take a look at the next monthly expiration, which is going to be more telling because you have a lot more volume done on monthly expirations than weeklies. Let's take a look at September 19th. And right now you got 25,000 sitting at $6, 23,000 sitting at $7, and then look at this open interest sitting here at $9. The $9 strike, 44,000. You had 62,000 in volume happening on Friday there. A ton of open interest there. So we are still loading up the chain for potential gamma squeezes if we continue to climb higher. Now, as far as the current IV percentile, still not bad. We're sitting at 66%, meaning 66% of the time it is lower than it currently is. So the IV obviously upticked a bit on Friday, given the massive 40% move that we saw. However, it still is looking pretty reasonable from an IV percentile standpoint for premium buyers of calls and puts as well. The implied volatility right now on Opendoor is sitting at 236%, obviously elevated. So as of right now, we look really, really good in my opinion. I'm very excited to see where this thing is going to be headed over the next couple weeks and really over the next couple months. I am a long-term holder of Opendoor, full transparency. I've given myself a very balanced portfolio. I have shares, I have calls, but I'm basically 50-50 in both, right? I have some short-term dated call options on Opendoor, but then I have some long-term ones as well for like January, February. I even have some for 2027. So I'm setting myself up for some longer-term moves, being responsible there, but also having a core position in shares because I agree with Eric Jackson. I think this movement is just going to continue to keep growing. And I agree with Eric in the sense that this is turning into more of a cult play similar to Palantir and Tesla in the early days versus this being just simply a meme stock short squeeze. So that's how I view it right now. And speaking of short interest, let's take a look here via fintel.io. The short interest on Opendoor is still pretty high. We're sitting at 23%. If you've been paying attention, in previous episodes, we've shown the short interest via Fintel being around 21-22%. So according to them, it is upticking. And I'm sure if you look at live short interest data from, Ortex, you're going to see that number even higher. I've heard some people say it's as high as 30%. So still a ton of short interest sitting there as well. And now that we are attempting to break out above $5, you basically have a lot of shorts in the red right now. A lot of shorts feeling pain. I would expect a lot of those positions to get closed if we continue higher. So very interesting. And if we take a look at apewisdom.io, as of time of recording, Opendoor is the number one trending stock on Reddit. Of course, that makes sense given what we saw happen on Friday. So a lot of momentum building around this. And also, let's not forget that Opendoor has essentially opened the door for new institutional interest. What do I mean by that? Opendoor has now broken above $5, and that is significant because it is technically breaching what would be considered penny stock territory, right? There's a lot of institutional investors that won't touch anything under $5. So the fact that Opendoor is now getting above that level means there's going to be a lot more eyes on it now, potentially more investors piling into Opendoor as it stays above $5. Obviously, it has to do that for more than a day. But if we are able, in the best case scenario, to build momentum, stay above 5, you can definitely believe that there's going to be more buyers stepping into this company. And also, you got Eric Jackson doing some heavy lifting, talking to Korean investors, trying to get some foreign investors involved in Opendoor as well. So a lot of exciting things happening. I'm very excited for the week ahead. Definitely make sure to take profits along the way, whether you're recycling short-term calls and buying longer-term calls, or even adding to your share position, or just taking the cash, right? That's why we're in this play, to make money. So, obviously do your own due diligence, but I'm very excited for what's going to be the future of Opendoor. We will, of course, be paying attention to this. Again, it's the most captivating story in the market right now, so we will continue to bring coverage on this. All right, so with that, let's move into some of the bigger macro news. First of all, I want to kick it off, however, with what we saw happen in the overall market on Friday. That, of course, gave a lift to Opendoor and many other equities. So this, according to the Wall Street Journal, Dow rises more than 800 points to first record of 2025. The prospect of interest rate cuts sparks broad gains in stocks. So let's do a quick review of the S&P 500. And as you can tell, we had a massive green candle on Friday. No surprise there. This is basically, what we saw across the overall market. I have some levels laid out here that are Fibonacci extension levels based off of the tariff lows that we saw back in April. And you can see that we tested out the 61.8% Fibonacci extension level of 64.67. We came right back up to it on Friday after we had, basically 5 down days in a row on the S&P. That was something that hadn't happened since January 2nd. So the chances of a bounce after that were pretty high already. Add to that the fact that Jerome Powell is mentioning rate cuts in the near future, and that's a recipe for a green day. So we got back above the 20-day moving average, which is great to see. And a lot of the selling that we had earlier last week was due to a lot of fears around being an AI bubble, essentially. So we basically recovered all those losses, and now we are on the verge of a new all-time high. Surprise, surprise, yet again on the S&P 500. The RSI on the S&P currently sitting at 62, so we got a nice reset from a lot of the selling pressure that we saw last week. And it looks like, early in the beginning of the week, Monday, Tuesday, I wouldn't be surprised if we break this all-time high and head on up to new levels. Let's take a look at the tech-heavy NASDAQ via the Qs. They managed to get back above the 20-day moving average on Friday as well. And we got the all-time high of 583. And the RSI on the Qs is at 55. It's definitely cooled off quite a bit, which is good to see. And so, moving forward now, I would expect the tech-heavy NASDAQ to also be in a position where it's going to be making moves to new all-time highs as well. Let's do a quick check-in on IWM. This was one of the big runners and something that I was closely paying attention to on Friday, because IWM makes up, the Russell 2000. These are small cap stocks, heavily dependent on rates and where they are at. So when Jerome Powell mentions rate cuts, small caps are going to benefit most notably from that news because of the fact that they're so dependent upon that. And we had a massive green day on IWM, which is great to see. We were up almost 4% on IWM. You love to see it. And that obviously gave a lift to, Opendoor. So that is awesome to see. The VIX obviously came off big time on Friday, given the fact that you had, Jerome Powell mentioning those rate cuts. You got the VIX now sitting at 14. So that's where we stand right now as far as, some of the overall indices. If we take a look at Bitcoin at time of recording, we are down about 1.5%, currently sitting at 115,232. And we had support right around 112,000 last week, and we got a nice bounce on Bitcoin, obviously being a risk-on asset on Friday with the overall bullish nature of the market. If you're interested in TradingView, you can check the link in the description and get $15 off. All right, so let's move on to some macro news. This from the Wall Street Journal. Powell flips the Fed's framework. The central bank abandons its 2020 idea that inflation above its target can be useful. So Federal Reserve Chair Jerome Powell sent equity markets soaring Friday with his dovish language signaling easier monetary conditions ahead. What may be more important in the long run, however, is that Mr. Powell and the Fed reversed their policy, quote, framework language from 2020 that signaled greater tolerance for inflation. The framework emerges from the Fed's periodic review of its basic policy assumptions and guidelines. The 2020 language was among the most poorly timed in the history of U.S. monetary policy. It came amid the pandemic lockdowns and shortly before what would become the worst burst of inflation since 1970. The Fed at that time adopted what it called, quote, flexible average inflation targeting. That's Fed speak for saying the central bank would tolerate inflation higher than its 2% target for a time to compensate for inflation that was lower than 2% for a period. As we warned at the time, this was, quote, a leap into the monetary unknown and potentially a very expensive one. And was it ever? Inflation hit 9.1% at its peak in June 2022. This article goes on to say, the Fed said sayonara to this on Friday, returning to plain old flexible inflation targeting, with the target being 2% inflation. This is an improvement, though it's leavened by the failure of the Fed to acknowledge its role in igniting the pandemic-era inflation that we haven't fully recovered from. Mr. Powell still blames the inflation burst this decade largely on the pandemic and its supply shortages, but at least he's restoring the Fed's framework to what it was before 2020. So this was massive news. I think a lot of traders, a lot of investors came into Friday's session a bit skeptical, right? To this point, Jerome Powell has remained reliant on the data. He hasn't really budged, even though President Trump, of course, wants the rate cuts. And so the fact that you have him on Friday, this past Friday, at the Jackson Hole Symposium, essentially telling everyone that, hey, we're going to be switching up the framework, is dovish language, which is good. It lends itself to Fed rate cuts. And basically, at this point, Jerome Powell has positioned the entire equity market in such a way that we can pretty much bake in a 25 basis point cut in September. As to whether or not we'll get further ones down the road, time will tell. Obviously, it's going to be dependent on inflation. But basically, Powell said, look, the job market looks weak. And because of that, we're going to be adjusting, basically our timeline as far as rate cuts and whatnot. So obviously, this is part of the reason why the market was so bullish on Friday and why Opendoor in particular, right, had such a great day. They're obviously dependent on rate cuts. Housing is dependent upon rate cuts. Mortgages need to come down. They're only going to come down if we get the rate cut. So that's basically what we got from Powell on Friday. So this was massive news. And if we take a look at the CME Group website, the next rate decision, of course, will be September 17th. As of right now, we're baking in a 75% chance of a 25 basis point cut If we take a look at the probabilities for really just the rest of the year in particular, right now there is only a 35% chance that we will get an additional 25 basis point cut in October, which would bring us down into that 3.75 to 4.0 range. So we will see if we get further rate cuts throughout the year. As of right now, though, I'm still leaning towards a 50 basis point cut in total by the end of the year. I think that's a bit conservative. Of course, if we continue to see the labor market kind of softening, kind of weakening, that could change. But as of right now, that's where we sit. And, some of the economic data coming out over the next couple of weeks could change some of these probabilities. So we will, of course, be keeping tabs on that. Now let's move on to some news with Intel. We talked about this on the midweek check-in last week, how SoftBank was doing a $2 billion investment into the struggling chip maker. And, the U.S. government, President Trump had floated the idea of the U.S. investing in Intel. Well, we got that announcement last week. This, according to Investors Business Daily. Intel confirms Trump administration now a shareholder with $8.9 billion investment. Intel confirmed late Friday that the company is giving the Trump administration U.S. government a stake in the chip giant. Intel announced that the U.S. government will make an $8.9 billion investment in Intel common stock. The equity stake will be funded by $5.7 billion in grants that have been awarded to Intel but not yet paid. Intel has received $2.2 billion in grants under the U.S. CHIPS and Science Act. The government equity stake will also be funded by $3.2 billion awarded to Intel as part of the Secure Enclave program. Quote, Intel is excited to welcome the United States of America as a shareholder, helping to create the most advanced chips in the world, Commerce Secretary Howard Lutnick said in a statement. As more companies look to invest in America, this administration remains committed to reinforcing our country's dominance in artificial intelligence while strengthening our national security. Intel Chief Executive Lip-Bu Tan said the company is grateful for the confidence the president and the administration have placed in Intel. So this is pretty big news. I mean, if anyone's been following Intel closely, they dropped out of the Dow some while back now, and that's been weighing on the company, definitely on the share price. The fact that they got SoftBank investing and now the U.S. investing, I think, is pretty massive news. And if we just take a look at Intel on the daily chart, obviously got a nice bump on Friday from, Jerome Powell's comments, but then also that news that came out regarding the U.S. taking a stake in the company. So if we zoom out to, let's say a 1-year chart, obviously it's been beaten up. We're still looking to get over that 27.55. That's the resistance. That was the high that we had on Intel back in February. And so it'll be interesting to track to see, kind of where this thing goes. Obviously, the government feels like it's an important part, and they want to make sure that, Intel remains one of the, key players as far as chip makers in the U.S. So very interesting stuff there. All right, let's move on to the economic calendar for the week of August 25th. So, very important, I believe, for Opendoor on Monday, August 25th at 10 a.m. Eastern. We will get new home sales for the month of July. The previous was 627,000. We got a forecast of 635,000. So it is expected to beat the previous number. So that's good. And we had already gotten from the previous week some really good numbers as it relates to existing home sales that came out. So that was good to see. And so we're hoping that we can get new home sales that, also look pretty good. So that's on Monday, August 25th. On Tuesday, you're going to get durable goods orders month over month for July, 8:30 a.m. Eastern. You're going to get CB consumer confidence for August. That comes out at 10 a.m. Crude oil inventories on Wednesday, August 27th. GDP for Thursday, August 28th coming out. Initial jobless claims. That'll be a volatile reading for initial jobless claims, right? The previous was 235. The forecast is 231. So it's expected to come in softer. Again, as we were talking about earlier, as it relates to, the Fed cutting rates, what they're going to do. Obviously, if you get initial jobless claims coming in a little hot, that's going to be further gas on the fire, so to speak, for the odds of a September rate cut. And then Friday, August 29th is a pretty big one, folks. We're going to get PCE. For those of you who don't know what that is the personal consumption expenditure. This is an inflation reading, and it is the Fed's preferred inflation gauge. So one of the things that we got going against us for a rate cut in general this whole time is the fact that inflation has remained high. Obviously, the Fed has been concerned about tariffs and how they're going to impact inflation. We see the job market softening, which lends itself to rate cuts, but inflation, right? Inflation needs to stay under control. So PCE on Friday, August 29th is going to be a big reading. The previous reading for month over month for July was 0.3%. Forecast is 0.3%. The core PCE for July is important. The previous number there was 2.8%. So we're hoping that doesn't come in too hot. So, be paying attention to that. Could be a volatile reading there, and definitely could impact Opendoor as it relates to those rate cut odds. All right, and last but not least, let's take a look at earnings for the week of August 25th. Really the big one this week, folks, is NVIDIA. That is on Wednesday, August 27th after the close, right? So NVIDIA being the largest company in the market, very, very important, right? They hold up a big portion of the market at this rate. And so, I don't really foresee a scenario where NVIDIA doesn't smash earnings. They seem to do that every quarter, but nonetheless, you do want to be paying attention to that. That could have a direct impact on the overall market. So again, that is Wednesday, August 27th. If you're an earnings trader and you want to position yourself there, just be careful with those premiums. They're obviously going to be baked in with earnings coming up mid-week. As far as some of the other earnings coming up on Thursday, August 28th, before the bell, you're going to get Best Buy, you're going to get Dick's Sporting Goods. After the close, you're going to get Dell, Webull, Gap. Those are some of the other ones there, but that's about it for earnings. Really, the big thing right now is going to be NVIDIA. So that's what we got coming up this week. So a lot to pay attention to. Like I said, new home sales coming up beginning of the week. We got PCE at the end of the week. You got NVIDIA right smack dab in the middle. Of course, with Opendoor, those new home sales are going to be impactful. So we'll see what we get this week ahead. We'll see if the market can rally to new all-time highs. Seems like it's just about ready to do that. So drop a comment, though. Let me know what your thoughts are on Opendoor, who the new CEO might be. Do you think we're going to be able to hold 5 and build from here? Or do you think we might see a bit of a pullback after the historic run that we saw on Friday? It's a very exciting time to be in the market. I hope you're making a boatload of money. Make sure to check in on Thursday, 8 a.m. Eastern. We will drop our midweek check-in. We'll see if there's any new updates with Opendoor. As always, appreciate the support that we're getting on this channel. We continue to just blow up, really, and continue to build this community. So definitely appreciate it. Thanks for all the support. Don't forget to like, subscribe, share with a buddy, follow wherever you listen to podcasts. And folks, as always, remember, plan the trade and trade the plan. Have a good one.